And John, one of the questions we've been asking this morning is what this is going to mean for consumers. When you see prices spike like that, what will that mean at the pump?
It's going to be jarring for consumers when they hit the roads this morning, Becky, and see the prices. If they didn't already see them yesterday, like I did, when their prices were $4.69 for regular in some spots in northern New Jersey, in a corridor where there's a lot of truck stops and things, and they knock themselves over the head competing for the lowest price. And the prices are unbelievable. Diesel fuel, if you have a diesel pickup truck or workman's van, $5 plus already, and it's only going to keep going higher. And this is really upsetting to people. I mean, when it costs you $100 plus to fill up your SUV, that's when the howls start to go up and people get really concerned. And then when you drive your car to the grocery store these days and see those prices, it's unsettling, and it's going to hit consumer confidence hard, in my view.
John, we keep talking about this again and again. Usually higher prices mean more people will drill, and you are seeing some smaller companies doing that. Is there a point where the majors will actually say, forget about how disciplined we've been saying we're going to be, we've got to go after some of these high prices?
I think at some point they certainly will. I mean, it'll just behoove them not to cash in. The problem you have is that, look, the industry got burned so badly in the height of the pandemic when oil prices went to minus 40. It was really an existential moment for a lot of the companies, and there were bankruptcies. And even right now, if you look at the price curve, there's a considerable, as you know, what we call backwardation. And there's no real sense at the moment that these prices are going to sustain themselves. As a matter of fact, for example, there was something on the wire a few moments ago before it came on that I saw where the Russians are claiming if we give up on Crimea and some of those independent zones, the fighting will stop. Well, if there's some kind of diplomatic climb down on this thing, these oil prices probably have upwards of $30 a barrel of air in them on the fears of what's going to be happening as we go forward if this thing continues and or worsens. So that's sort of the problem the oil companies have right now. They cannot count on this price environment lasting, at least as you look at things as they stand today.
When you say $30 of air, how do you get to that? This is just $30 that's there on the idea that we could actually ban 4.3 million barrels per day of Russian exports from coming out. That's why you get to these levels. If that actually happens, is this a fair price, or where do you see prices headed if there isn't a resolution?
They could well go higher if we do, in fact, get a full embargo of the Russian oil, especially if China's hand is forced. And believe it or not, they're already backing away from some other commodity purchases from Russia. If they foreclose the oil, and their companies do, again, because of the fear of Western sanctions, because they can't operate then with the rest of the world, that's when the major problem hits. But when I say there's $30 of air in it, it's sort of where we were before this crisis really blew up. And it is also, when you look at the chart, and just this has gone parabolic to the upside. In any other normal circumstances, this would be the makings of a blow-off top for the ages again, just like we had back in 2008. So that's sort of the warning sign here. So, this 123 is certainly a crazy number, but it's also not a number that any of the oil companies at this point are going to bank on sustaining itself for any meaningful period of time.